Internal Revenue Service IRS Tax News. Taxpayers should use the correct filing status for accuracy and to avoid surprises. IRS Tax Tip 2021-51, April 15, 2021. Taxpayers need to know their correct filing status and be familiar with each option. The IRS Interactive Tax Assistant, there's a link to that here, can help them determine their filing status. So I'll give you the quick recap here. You can get into more detail about them with the Interactive Tax Assistant. We're talking about things like single, married filing, joint type of filing statuses. These are going to be important because they could have an impact on things like the tax rate that will be applied, as well as income limitations and phase-outs, and the standard deduction amount if taking the standard deduction versus the itemized deduction. They could have an impact as well. So the major two categories you can think about are single and then married. Those are the two primary categories, and then there's other categories that are basically built upon them. So single, of course, meaning you're not married. If you're married, then the question will happen, well, when does the marriage take place as to when we would file married filing joint? And typically that would be at any time in the year that you're filing the tax return. So if you were married at like December 31st of 2020, then typically for taxes, you're considered married for 2020, the whole year at that point in time. So that's kind of like the cutoff situation. Now, then you also have the other primary filing status, which is going to be head of household. So head of household will typically be a step up from single. So if you are single or if you're not married, then typically your options are between head of household or single. If you can choose head of household, it will typically be better, typically resulting in better tax rates and whatnot, but you normally have to have some kind of dependent that would be involved there. So if that is the case, then you want to do your research and make sure that you're picking up the beneficial filing status, one would be most beneficial. If you're not married, normally, then you're thinking between the single or the head of household. If you're married, then often questions come up as to whether or not you should be filing married filing joint, married filing separate, or some other status. Now, normally, if you're married, those are the two options that you have. Normally, if you're married, unless there's some kind of divorce or some type of separation, you can't typically jump back to single at that point in time. You can't be legally married and then have the option of choosing married filing joint or choosing to file single generally, unless there's some kind of divorce or separation. If there's a weird circumstance between that, you can look at basically the regulations to see whether or not, you could basically do that based on the separation. However, that's the general rule. And if you're married filing joint, typically for taxes, it's beneficial to file married filing joint rather than married filing separate. So if you can't file single, in other words, your other option is to say, well, I can file married filing separate. Typically, that's not beneficial because you could lose some access to some benefit type of things because the IRS is skeptical of people filing married filing separate simply to take advantage of the tax code. And it's very difficult to basically parse out when you think about the income divided up, all the different kind of deductions. So some of the deductions will then be limited to people filing married filing separate. So you can actually do your tax return married filing joint and try to file it married filing separate to see which would be most tax beneficial. But usually the married filing joint is the most tax beneficial, and you would only be filing married filing separate if for whatever reason you want the refunds going to the individual separately and whatnot. Usually not to increase the taxes. But there could be some circumstances, but usually because you want to file separately and have the separate refunds going to the separate people. Now, in the event of a separation or divorce, then at that point in time, you might go back to single filing status, or you might be in a situation where you could be in a head of household filing status. And remember, in a situation where you got an issue with a custody situation, possibly with a child, that could then be claimed on one of the other return, you have to decide whether or not that's going to have an impact on your status if between head of household or single, which sometimes can be a complication as well. And then we have the qualified widow or widower, which is a more unusual type of circumstance as well. But that's another kind of filing status to be aware of in that type of situation. So that's going to be the brief overview. If you're kind of on the line on these filing statuses, then you're going to want to do some research and make sure that you're picking up the proper status. And that on the line would be things like, you're married, but you're separated kind of, but not legally separated, but you've been living apart or something like that. Or you're single, but you have a qualifying child, possibly joint custody type of situation. So you're questioning whether or not you should be head of household filing status or single filing statuses, or a qualified widow or widower could have a situation where you want to be sure that you're picking up the proper status there. So those are the ones that are a little bit confusing. Most of the time, it's fairly straightforward, but there are areas where it can get quite complex actually when there's situations like that, and you can do your research then on the IRS website. Also note that the tax software is useful, can often help people out to kind of pick out the filing status that would be correct, because it'll have an interview type process. Remember that there is access to free tax software that you can search from the IRS website. So a taxpayer's filing status typically depends on whether they are single or married on December 31st, which determines their filing status for that entire year. So more than one filing status may apply to certain situations. If this is the case, taxpayers can usually choose the filing status that allows them to owe the least amount of tax. That's typically going to be the strategy, right? If you're married, you could file married filing joint or married filing separate. Normally, you'd file married filing joint basically because that's the biggest benefit. Although, of course, then the refund comes to the one entity, taxable entity, the married couple, as opposed to the refunds going then to the two individuals there as well. So when preparing and filing a tax return, the filing status affects if the taxpayer is required to file a federal tax return, if they should file a return to receive a refund, their standard deduction amount. So notice again, filing status, here's where the impact would be. We don't have the exemptions that we had basically at one time, but it still can have an impact on the standard deduction. If they can claim certain credits, and the amount of tax they should pay will be impacted as well. It could have an impact basically on the tax rates, the tax tables as well. So here are the 5 filing statuses. We have the single. Normally this status is for taxpayers who are unmarried, divorced, or legally separated under a divorce or separate maintenance decree governed by state law. Married filing jointly. If a taxpayer is married, they can file a joint tax return with their spouse. When a spouse passes away, the widowed spouse can usually file a joint return for that year. So it gets a little bit confusing if a spouse passes away, then usually you have that year you could file married filing joint, and then the question then after that is whether or not single, head of household, or married or qualified widow or widower. So married filing separately, married couples can choose to file separate tax returns. When doing so, it may result in less tax owed than filing a joint return. So you can actually kind of think about what it would look like to file joint and file married filing separate. It could be actually a little bit confusing under different state laws to basically file married filing separate. You could run them both and see which one would have the greatest tax benefit. I believe normally the greatest tax benefit would be for the married filing joint, and oftentimes when people file married filing separate, they might have a situation where they're trying to divide up, where the refund should be going, and that's one way you could kind of divide that up. So that could be an objective to file married filing separate as well, because otherwise, of course, it's kind of confusing when you file married filing joint to know how much of the refund is going to one person or another, right? So you could file married filing separate, which could be a way to kind of separate things at the source in that situation as well. So head of household, unmarried taxpayers may be able to file using this status, but special rules apply. For example, the taxpayer must have paid more than half the cost of keeping up a home for themselves and qualifying person living in the home for half the year. So notice if you're single or not married, then the step up from there in terms of benefits would generally be to be head of household, but then you're thinking that you typically would have like a dependent would be the normal situation in that case. So if that is the situation, then make sure that you're looking into that and picking the proper single or head of household being the beneficial one, single's the worst, right? That was the worst one. So for taxes at least. So qualified widow or widower with dependent child. This status may apply to a taxpayer if their spouse died during one of the previous 2 years and they have a dependent child. Other conditions also apply. So in the situation, married couple, spouse dies, then in the year that the spouse dies, possibly still married filing joint in that year, then the next 2 years question is, do you go back to single or head of household, depending on if they're a qualifying child, or do you file qualified widow or widower, which would be a beneficial status. Qualified widow, widower would be a higher status than either single or the head of household. And if there's a qualifying child, then typically that's when that you would file then qualified widow or widower for that point in time. I believe the 2 years after the year of death. So that's the general rules on it. Once again, usually it's kind of straightforward. You know where it stands. You want to make sure that you're picking the proper one. The confusing ones are often between single or head of household, and between if you're married, should you file married filing separate? Is it beneficial to go through that calculation and look into it? But oftentimes people file married filing joint in that situation. So if you're on the border in that custody kind of situation as well, if there's one child that you're not sure who's claiming them, and if whichever spouse claims them could change their filing status possibly from single to head of household in that situation, or whoever, the two parents, then that can be a kind of confusing situation. You want to look into a little bit more detail on those items as well. So more information can be found on Publication 501, Dependents Standard Deduction and Filing Information. There's a link to that here. There'll be a link to this in the description.